This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin is going increasingly mainstream. This weekend in the Financial Times weekend edition, we can see that Musk and a giant Bitcoin are the head story, at least on the digital edition, asking, is Bitcoin going mainstream? Why Musk and America's oldest bank, BNY Mellon, are backing the digital currency. Something similar happening over at CNN. These are the people who've been saying that Bitcoin is a fraud and a Ponzi and it's too volatile. But now they're coming around and saying, if you've been ignoring Bitcoin, thinking it might just be a financial fad, now's the time to start paying attention. So this is very interesting to see, obviously getting some play on the Bloomberg homepage as well as we move in towards $50,000. And yesterday, Buy Bitcoin was trending on Twitter. It doesn't look like it's trending right now. But the mainstream is waking up to this, and this is showing up in the blockchain data as well. I rely on Willy Woo for this. He's been talking a lot about how most of the capital coming in has been institutional capital and how the Bitcoin are being bought and then withdrawn and put into cold storage. I'm not sure how he measures this in terms of the flows. Maybe he looks at the transaction size or something. But he says within the last 4 weeks, retail investors have finally arrived. Up until now, this has really been an institutional investor-driven boom. By contrast with what happened in 2017, when it was really just retail speculators. One way to ask yourself where we are in the trend is to ask yourself what percentage of people that you know, particularly investors, but maybe just people that you know, own Bitcoin. For me, it's probably about 5%. So still a very low percentage, even though I know a lot of people in Silicon Valley, and you would think that more and more people like this would own Bitcoin. This is very different. This means we're very early in the rally. What percentage of people own internet stocks in March of 2000? I would say that every single investor and trader in the U.S., maybe with the exception of Buffett and some of his followers, but everyone in the world owned, for example, Cisco and Oracle and Sun Microsystems and Yahoo in March of 2000, and that's when it peaked. So we're in a very different situation right now. Before I continue with this video, I wanted to ask your guys' help with something. You know, I have this new book on Bitcoin that's on Amazon. It's available for Kindle, audiobook, and paperback. But what I wanted to ask you, if you can do this, especially if you're in the US, I have my top review here by a guy named David Dube or David Dube. It's a very disappointing review because he says he likes the book a lot and that it's well written, etc. But then he only gives it 3 stars, and his critique of it is that Bitcoin is nothing other than a vehicle to help the rich get richer, and that it won't help him. My book won't help him start a lucrative day trading business or create current cash flow. And I think it's a very misleading review. I think it's an unfair review simply because it doesn't critique the book itself. It's a critique that the book is not about day trading or something. And I'm not sure David has even read this book, because the main reason I wrote this book is for people who are not already rich, who can use Bitcoin as a vehicle to increase their health, their wealth as well, I should say. So this currently has 25 people finding this helpful. It's the top review, unfortunately, and it's not a very good review. I don't think it's a very fair review either. So if you're so inclined, I'd really appreciate it if you could go to Amazon and maybe upvote one of these other reviews below him, Buck Buick, Joel Peterson, or you can read the book yourself and give an honest review, whatever works best for you. But I think this is an unfair review, and it will drive my biggest concern. I don't really care about the book sales. I don't make a huge amount of money from Kindle books, but my main concern is that this will drive people away from buying the book, and it's very misleading. I'm not sure David has even read the book. So if you could help me with that, go to one of the other reviews and click helpful. If you're in the US or if you're in another country, if this review is showing up. Back to the video. This is a really interesting comparison here between what the news coverage looked like for Bitcoin in 2017 versus now. We had this famous article from New York Times talking about how everyone is getting hilarious rich and you're not. And now the equivalent coverage is major companies and banks are buying into Bitcoin. So this is a very different situation than it was in 2017 when it was more kind of a gambling narrative. Now it's really long-term holders, hodlers, coming into Bitcoin. We can see this as well in some news over from Europe. Deutsche Bank is going to offer crypto custody and prime brokerage. It looks like this is not something they're really publicizing, perhaps for fear of some sort of backlash. But this is very significant, obviously. I believe it's the biggest bank in Europe. They've had a lot of problems really since the financial crisis, but I think they're figuring out that getting on board Bitcoin and the fees associated with custodying and storing it could help them, and they don't want to be left behind. This is how the game theory works. When your competitors get into Bitcoin, you have to get into Bitcoin. When Tesla gets into Bitcoin, Facebook and Google and Apple need to eventually get into Bitcoin. Another great piece of news from Canada. This is the first North American Bitcoin ETF has been approved by Canadian securities regulators and will be trading obviously on the Canadian exchanges. I think we're very close. We're 6 to 12 months away from something similar happening in the US. Either way, people could still buy this Bitcoin ETF. You need Canadian dollars to do it, so there is some exchange rate risk there if you're a US investor. But either way, these ETFs are coming. There's no way that the US is not going to approve one. And once we have a US Bitcoin ETF, there's just going to be tremendous flows coming into Bitcoin from the RIA crowd, from retail investors, and from people who it's just a little too difficult to figure out how to buy it on Coinbase and put it into cold storage, etc. Of course, that's the best way to do it. But these ETFs are a huge, huge fiat on-ramp for whatever it is. When the gold ETF came out, it really gave a great push to gold. And something similar is about to happen to Bitcoin. So everywhere you look, there are new flows and potential flows coming into Bitcoin. It's really quite amazing. At the same time, some sad news. It looks like Nassim Nicholas Taleb, who's been a hero of mine over the years, he wrote the famous Black Swan book and a bunch of other books that are really worth reading. Unfortunately, he says he's getting rid of his Bitcoin. And when I saw this, I was quite worried until I saw the reason that he's giving. The reason he's giving is that it's too volatile. And I just can't even believe that I'm reading this. This is the guy who wrote the book Anti-Fragile, who talks about how robust things are not fixed in price, and if something is manipulated by the government and the price volatility is compressed, it actually makes it more dangerous. And so I feel sorry for this guy. He's obviously, I'm sure he's made a lot of money on his Bitcoin. He was already very wealthy, but it's sad to see him getting out, especially when he was a pillar of the movement and not even having a very good reason to get out. What I fear has happened to him. He's in the process of recovering from COVID. I don't want to speculate too much about someone's personal life, but it's hard for me to see a rational reason why Taleb would sell Bitcoin. It's the ultimate Taleb asset. But that being said, it doesn't concern me at all, simply because saying Bitcoin is too volatile. This is like the most basic critique that's been going on for 10 years. And it also ignores the fact that most of the volatility is to the upside, and that's the direction you want the volatility to be. Pomp on his Twitter feed in this tweet talks about how Bitcoin has gone up almost 500% in the last 12 months. And I think he's alluding to Taleb's tweet, talking about, yes, there was a lot of volatility along the way. There was that terrible drop in March of 2020 during the COVID liquidity crisis. That being said, and this is the same chart I shared yesterday, 60% of all Bitcoin wallet addresses have not moved any Bitcoin during those 12 months. So these are really strong hands, diamond hands, that even during giant drawdowns and huge price appreciation, you would think that if this were a trade for a lot of these people, being up 100%, 200%, 500% would be a time to take profits. But these are obviously Bitcoin hodlers like myself who will never sell or will at least hold until we get in the high hundreds, thousands, or the millions. This was another critique of my book that David gave, that when I talk about never selling, it seems irrational. And I tried to explain to him in a private exchange that I do talk about on my YouTube channel as well. I can't remember if I talked about it in the book. The point of never selling is not to have to pay taxes on it. You can borrow against your Bitcoin, so you can still use your profits as well. And I assume that this is what hodlers who have been holding throughout this huge volatility over the last 12 months. They're holding for much higher prices, at which point maybe some will sell. People like me will only borrow against their Bitcoin and never sell. And the fact that you can now borrow against your Bitcoin, the interest rates are still fairly high, 10 or 11%. Bitcoin has a long way to go, so I don't think it makes sense to do it yet. I'll probably wait until Bitcoin's at 500,000 or $1 million or so to borrow against some of my position. But the point is, in previous bull cycles, the only way you could really realize your profits in Bitcoin was by selling. This created more supply on the exchanges and helped to keep prices down. This time, if people are not selling, it's a completely different dynamic. It really increases the scarcity, and you have this win-win for Bitcoiners, where they can hold Bitcoin for the rest of their lives, pass it on to their children and grandchildren, and still borrow against it. A lot of people have critiqued this and said, well, you're just taking on debt. But debt that is fully collateralized by an asset, especially if you do it very conservatively. So if you have $100,000 worth of Bitcoin, maybe you borrow 10% of that. You borrow $10,000 against that. And it's very unlikely at this point that Bitcoin goes down 90%. If it were to go down more than 90%, you'd have a margin call and you'd need to come up with some cash. The other thing I should say about Bitcoin loans, which people have been asking about, and I should really make a whole video about this, is that you never need to pay them off. It's a little bit like borrowing against your house. You can roll one loan into another. You can basically refi your Bitcoin loans. And so it's a special form of debt. This is what a lot of billionaires do with their stock. People like Elon Musk with his Tesla, he sells very little of it. Instead, he borrows against it at very low interest rates. And this should be quite possible with Bitcoin, simply because it's a very pristine, very liquid, very easy to move form of collateral. And as such, the interest rates on it should be very low. I imagine once it becomes a more mature asset and we're in the high six figures that per Bitcoin, that the interest rate to borrow against your Bitcoin will be 1 or 2%. It should be lower than borrowing against a house, even, because houses are illiquid and they owe property tax, and it's a very long process for a bank to foreclose, etc. So I'm expecting a lower interest rate on Bitcoin. Anyway, sorry for that detour. Wanted to finish with two other tweets. This was a great one from American Hodl. Digital scarcity only happened once. I think I 90% agree with this. And he's certainly talking about Bitcoin as a store of value here, that it can only happen once. There's no store of value really is a winner-take-all market, especially in the digital realm. We have other physical stores of value like real estate and gold, etc. I would expect a lot of their monetary premium, though, to be sucked out by Bitcoin, simply because it's so much easier to move around and to hold. And so this is definitely, I think it's an interesting thing to ponder. Was this a once, something that only happens once? There's no reason to create Bitcoin 2.0, simply because when you have the original Bitcoin, it's good enough. It functions as a store of value, and it has all the network effects protecting it. Finally, wanted to finish with Willy Woo's price target. He's got this interesting top cap model, and we can see that in the past, Bitcoin peaks when it gets to the top of the channel, to this green line. So this was the peak in December of 2017. We're still very far away from the peak. The peak is trending higher here, the green line. So we're right here. We can see that it's already close to 100K, and he projects that the way, because the green line is constantly moving up as the price moves up, unless we get just a gigantic flash rally in the next few weeks, what's actually going to happen is that the green line will continue to trend up to around 200,000, and then Bitcoin will meet it somewhere around there. I think this may be too conservative that we actually go higher, but I am calling for Bitcoin 200,000 by the end of this year, by the end of 2021. If you found this video helpful, again, help me out and go upvote a different review on Amazon. I'll put a link in the description notes below so you can find this book. And you may need to purchase it in order to upvote a review. I'm not sure. Either way, I appreciate any support that you can give me on this front. And if you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.